This is Apple. Here are your price targets for Friday. We ended the day at $186.86, up more than 1%. The day's low, 183.82. The day's high, 186.95. This is where we ended. To the north side from where we are takes us to a gap fill beginning at 187.10. At 3 standard deviations, that gap closes at 187.92. That is also resistance and a potential take profit area. And should we get above that at 4 standard deviations, that is roughly 189.03. And this would also be another level of resistance. Now, from where we are, if we go to the south side, that would take us to support and the middle of the trend at 184.38. Below that, at -2 standard deviations, roughly 182.03. That is support and a potential buy-in area as well. And below that, 180.85, and at -4 standard deviations, 179.73. The company reported earnings on Thursday. They brought in $119.575 billion. The estimate called for $117.987 billion. And on Friday, the company is going to launch the Vision Pro, which is a first generation mixed reality headset. It is going to run $3,500. And Tim Cook says that there's a lot of technology that is integrated into the headset with 5,000 patents contributing to its development. So we shall see how this contraption, this Vision Pro, works out, but they've already pre-sold between 160 to 180,000 units. So I think this is going to do very well for them. And as far as the profits, here up 2.1% from the October to December period from a year earlier, and a net income of $34 billion, so up 13% there. But shares fell by about 3% in after hours trading. Of course it did. Apple just doesn't go straight up. It gets beaten, whipped around. This thing is a slow mover. I've had it for a very long time, and it is my favorite stock. Now, I also want to show you something on the let's take this to the 1 hour time frame. We've got a gap that I have been tracking for a very long time. That would take us down to 164.17. We are not in the channel, not in the zone, just something to be aware of. And we are not even close, but on the 5-minute and on the hourly, we are still going in a downward channel. All the gaps that I've mentioned previously have also gone to the south side, as well as the gaps to the upside. But just keep that on your radar. On the hourly, we are turning up, so that's good. Now, I want to show you a trade, 2 other trades that I took today. That is AT&T. This one is for my mom. I'll give you the price targets first. We ended the day at 18.04, up nearly 2%. The day's low, 17.82. The day's high, 18.16. So this is where we are. And above that, it's hard to see since I've marked this out, but that will take us to the middle of the trend and resistance and a potential take profit area at 18.13. Above that takes us to 18.26. 18.33, and another level of resistance, which we will not get to on Friday. And if we do, that would be a miracle. And I don't anticipate that. 1840 is the high end. Now we will get to -2 and 2 standard deviations and play between those sets there and the middle of the trend, and that will change as well. So that takes us down to $18, $17.93, and $17.87. Looking left, note the bounce at support here, the sell-off at resistance. Here's resistance. From here, going down to the middle of the trend takes us back to support. Now there's a gap to the south side. That takes us to the beginning of it, which would be $17.96. Closing out at roughly $17.72. Note the bounce here at support, sell off at resistance. Now I'm going to flip this over to the 1 hour so you can see what I did. I had set this to sell at $18.11, and I should have adjusted that number, but I didn't because I was busy. And this is where I bought in. Let me move this out of the way so you can see. I bought in here at $16.20, sold out on Thursday morning. Coordinates, so $16.20, sold out at $18.11. That is a return of 11.79%. So I got off the gravy train, and obviously if you stay in this trade, the 1 year price target is $18.93, and then after that takes us to $25. So lots of room to the upside and to the downside. So it makes a good swing trade, which is what I like to do. My mom likes me to stay in things for her longer because she's investing, but it does make me nervous to do that because you do get whipped around, and I don't want to lose any money for her. Now, to the upside, there's a gap that takes us to 1969, and obviously if we fill that gap, that will even surpass the 1 year price target. And as you can see, we have some gaps to the downside, and we've got this gap, and within that gap is a smaller gap. But should we close that out, that will eventually take us down to $14 and roughly 36 cents. And this gap that I marked out, let me extend that. It closed out right there. This gap closed out right here. But just for giggles, I'll draw it out in case you have not ever done that. This is what I like to do to keep myself organized, and then something that I look forward to, either to the gap to the downside before I buy in, or a potential to the upside before I sell out. If I sell out too early and I see a gap that I think that we can reach, I don't want to do that. So that helps prevent me from doing that prematurely. But of course, it happens all the time where I get in and out too early. But I do set my orders the night before, typically for the sell orders, but for the buy orders, I do it that day. Now this went up, so obviously I anticipate it to go down, and it did, and it closed out here on this one on October 6th, but I had not finished drawing that out. And then this gap closed. Many opportunities for swing trades when you look at the gaps. That kind of helps you hit your target. But this is too far out, not even there. And this is too far up to the upside. So between -2 and 2 is, again, what I consider pretty safe. Or if you're at -2 and you go to the middle of the trend, that's even more conservative, if that's what you like to do. Okay, the next one is DIDY. I've traded this many times when it was way up there, and also when it tanked. So this is a look at the hour. But as you can see, I've traded this many times, 9% here, 1.5%, return on my money. 5.8%, 15%, 5.9%. Yeah, this thing whips you around for sure. And just when you think it's on the rebound, it's not. All right, let me take you to the 5-minute and show you what I did this time around. Ignore all the horizontal lines. Those are my buy-ins, my sells, or my support and resistance lines, which I eventually delete. All right, 352 is where we ended, up 1%. The day's low, 351. The day's high, 362. The 1-year price target is $4.80. Now, from where we are right now, we were up here and we're down. So we are at support. So I will anticipate a bounce, but right now the RSI is telling us that we're still going to go down. So we could bounce at a former buy-in area that I tracked. There are many levels in between here. You can turn on your VWAP, you can turn on your Bollinger Bands, do your trend lines, your former resistance lines. All right. So to the north side first takes us to roughly, well, let me move this over. $360, resistance and a potential take profit area. $364 and $368. When I set my sell limits, I usually do it between 2 and 3, and sometimes if I'm playing a little riskier my hand here, I will go to 4, but I never anticipate going to 4, especially when we're down here. If we're up here, then yeah, the chances are greater. But from here, I don't think so for Friday. But that would be great if we did. We could wick up there. You never know, just like this wick to the south side. So again, the high side, 368. Now to the south side, another level of support and potential buy-in area takes us to 343, 339, 335. And if we get down here, that is my potential buy-in area. So I will be trolling this and buying down here again if we should get down there on Friday. If not, there will be other opportunities. Note the sell-off here at resistance, the buy-in here, support, down here, sell-off at resistance. Now to the upside, we have this gap that will take us to the beginning of it will be, oops, let me turn off my magnet, 378 to the upside. And 387. All right, that's it for DIDIY. Just very quickly, congratulations if you've been in this trade, CTVA. We ended the day at 54.06. Mark that out. Up 18% off of a great earnings report. Reported 3.7 billion, expected 3.6 billion, and off to the races. So there is a massive gap up. So guess what? What goes up must come down. What goes down will not necessarily go back up again, but sometimes you got to get down to get up. Got all that? All right. So looking left, I've tracked this in the past. The most recent was on the 15th of December. We went all over the place, sideways, up, down, up, down. So there was a gap here also that I was tracking to the upside. So that touched, oh, look at that, right at the gap up on earnings. So that is no longer in play, but that was right here at basically 47.01 on the way up. Look at this nice channel here. But be careful. It will come down and it will rest, and then maybe for another leg up, which would be what, $59.30, up 9% from where we are. And then the next target after that, $69. But right now, this is hot and heavy. Look at the RSI, hot and heavy, overextended. So it could go sideways, up a little, and then get back down to reality. -2 standard deviations. Definitely, I will anticipate it to go to. All right. So the levels here. Wait, did I do that for you already? No. Well, if I did, I'm sorry, because now I've gone all over the place. 56.62, 58.74, and 60.87. That's what happens when I get off on a tangent here. Okay, back to the middle of the trend and the beginning of the gap. Roughly 52.36, support there, another level of support, and many levels of support in between, but I'm just tracking the ones that I like to do off the line there, off the linear. 48.29, 46.27, and that gap closes out at roughly 45.81, and right there, 43.99. I will mark this out. Change this to red so that I know it's going to go down. So when I glance at this very quickly, I'll know. Color coded here. All right, that does it for me. Thank you so much for watching.